Valuation and reporting of cryptocurrency on income, gift, and estate tax returns. That's the subject of today's ACTEC Trust and Estate Talk.
Welcome to ACTEC Trust and Estate Talk from the American College of Trust and Estate Counsel, a professional society of peer-elected trust and estate lawyers. This series offers professionals best practice advice, insights, and commentary on subjects that affect our profession and clients. And now, our ACTEC Fellow host with today's topic.
This is Susan Snyder, ACTEC Fellow from Chicago. Everyone has heard of cryptocurrencies such as Bitcoin and others. What if your client wants to gift cryptocurrency during life or dies owning cryptocurrency? How do you value this new type of asset? To answer these questions, you will be hearing today from John Varga of MPI Business Valuation and Advisory of New York City. Welcome, John.
Thanks, Susan.
So are you going to talk today about types of cryptocurrency valuations? I think everyone would be interested in that.
We're seeing a lot of activity in the cryptocurrency market on a few different fronts. I think the biggest volume of business we're seeing is in charitable gifting and in direct contributions of cryptocurrencies like Bitcoin and Ethereum and Litecoin and some others. We're actually seeing a lot of that with Fidelity Charitable, in fact. To a lesser extent, we're seeing cryptocurrencies pop up in other more traditional parts of our business valuation practice. So to the extent that we're running valuations of a securities holding FLP, for example, we're seeing some cryptocurrency balances pop up in there, so we have to be sensitive to pricing, just as we would be with a securities FLP. We're seeing some private equity funds that own cryptocurrency positions, and so coming back to the pricing and the volatility of cryptocurrencies over the last couple of years, looking at capital account statements that are actually as of a particular date become very important. Looking at some more exotic things, we're seeing something known as a simple agreement for future tokens, or a SAFT. And I describe that as an SEC-friendly way to conduct the so-called initial coin offerings, because investors are now entering into agreements with companies to purchase the coins, as opposed to simply entering into direct transactions to purchase these digitized tokens or coins or whatever you want to call them. And we're also working with some entrepreneurs that are developing some of the underlying technologies, exchanges and other things that are riding on top of all this blockchain technology. So some very smart folks are getting involved, and we're helping them out with their estate and gift tax planning.
So you mentioned the SEC, but for tax planning, everyone thinks about the IRS. Is this
Sure.
really the Wild West out there, or has there been any guidance from the IRS on this?
There's been a little bit. So some of the traditional framework is still in place. You're still going to look at guidance for appraisal requirements for non-cash charitable contributions, record-keeping requirements for deductions of charitable contributions, IRS Publication 561, determining the value of donated property. But zooming in on cryptocurrencies, the IRS put out Notice 2014-21, which is called IRS Virtual Currency Guidance. So that forms the basis of the framework that we're really looking at.
So can you give a little more detail on what IRS Notice 2014-21 deals with? Does it have any guidance on an appraisal or getting a qualified appraisal?
You're still required to get a qualified appraisal. One question that comes up in a lot of conversations is, how come I can simply donate marketable securities, and the charity or Fidelity Charitable in some cases, they have a plan in place for marking those securities to market. So why can't I go online and say, hey, here's the price from Coinbase or Google or whatever? And the answer really shortly is you can pick five different prices, and you're probably going to see a swing of a couple $1,000s. So I would say on that basis, we're still in the Wild West in terms of how to actually mark something specifically for gifting. Academically, you can look at prices all around the world, but we have requirements here in the U.S. as a nation of laws.
So what is the standard of value for these currencies?
Well, we're going to look at fair market value, and so we would take a look at guidance from Section 2512. Essentially, it's the classic hypothetical willing buyer and hypothetical willing seller entering into an arm's length transaction, and both parties having reasonable knowledge of all relevant facts. So that stays the same. And then really when we're dealing with cryptocurrencies, we then have to take a look at IRS Notice 2014-21 to see how we should be reporting it. And they give us a little bit of guidance. So obviously you have to express your transactions in US dollars still. The IRS would say if a virtual currency, and Bitcoin counts as a virtual currency, of course, if there are exchanges out there and those exchanges have active markets and they're establishing a good supply and good demand, take a look at those exchanges, come up with the exchange rate, and convert them into US dollars.
So can you provide some details on how you prepare an appraisal for cryptocurrencies?
Sure. So in any appraisal, you have the three classic valuation approaches. The income approach deals with capitalization of earnings and discounted cash flows. The asset approach is something more relegated to more traditional securities and real estate. I would say, as an appraiser, cryptocurrency valuations probably fall under the market approach. And to borrow some terminology from the financial reporting world, I would say we're looking at essentially level one assets. Coming in that terminology is coming from FASB Statement 157. So we take a look at a couple of different things. We pull in pricing sources coming from some major U.S. exchanges. We take a look at pricing from leading exchanges like Coinbase, Gemini, and Kraken. And we also look at indices as well. There's a little bit of academic debate there. We like to put a lot of reliance on the Global Bitcoin Price Index published by a company called Blockchain Data Limited. It's a volume-weighted average pricing index for Bitcoin, and it's also called the GBX for short. There's also the GEX, which is a similar volume-weighted average pricing index for Ethereum, which is another cryptocurrency that's out there. We also take a look at CoinDesk, a very popular news site for cryptocurrencies. They have an index called the Bitcoin Price Index by CoinDesk. It goes by XBP. That's a straight average, and I have some academic difficulties with using a straight average versus a weighted average. And a lot of valuation analysts and financial institutions have a Bloomberg terminal, of course. So we take a look at pricing on the Bloomberg terminal. Bloomberg sources their data from Bitstamp, Coinbase, Itbit, and it's a cute name, and Kraken as well. So what we do is we pull in, if the Bitcoin average price index, the GBX, they give you one fixed data point as of a certain date. When we take a look at CoinDesk, Gemini, Kraken, and Bloomberg, and some others, they give you a high and a low. So we look at the average of the high and the low. Depending upon your pricing date, I mentioned before, you're going to see some pretty wild swings in data pricing. To give you one example, we did some work for quite a few clients at the end of 2017, for example. And I can tell you, we were looking at Bitcoin prices ranging anywhere from about $14,500 to about $15,500. So this is, like I said before, this is not something you would accept when you're trying to price out marketable securities. So we look at an average of all those different indicators at the end of the day.
So it sounds really like MPI is on the cutting edge of these types of valuations, but what are your challenges that you're finding in doing this?
You still have pricing aberrations. Bitcoin started out at zero, literally back in 2009. It was trading for pennies, and then when I first became aware of it, it was trading around $6, and I unfortunately did not make any investments at that point. So we've seen a high of just under $20,000 at the end of 2017. So we can't really separate a flash crash and spikes in prices from a new norm or a new plateau. That's not really something that we're able to do for something that's really growing. There's no legal concept of insider trading, and insider trading is a defined term by the SEC. Bitcoin, the SEC and the IRS both agree it's not a security, it's property, it's an asset that's out there. So there's no concept of someone really trying to get ahead of someone else through insider data, because there's no framework to really establish that. That leads the way towards market manipulation with some exchanges. There was a variant of Bitcoin called Bcash that was forked from Bitcoin back in August from some individuals, and Coinbase, one of the leading exchanges, had an issue where their employees were aware of Bcash coming on board onto the Coinbase platform ahead of the public, as you would expect. So you started seeing a run-up in pricing. Coinbase finally released Bcash on their platform. The price skyrocketed to $4,000 or $8,000, depending upon the time of the day you were looking at. Their website was crashed, their website was down, inaccessible. And now that particular variation of Bitcoin is quite a bit less than $1,000. So there's an insider trading lawsuit against Coinbase now because their employees were engaging in some form of manipulation. Luckily, there's a company behind that, so there's actually somebody you can go to in the courts. Not so much a challenge, but some things that you have to keep in mind just on a very basic level. If you're actually engaged in mining and not exchanging, when you're mining Bitcoin or Ethereum through a homemade computing rig, for example, when you're generating those coins through their reward process, you're taxed at ordinary income rates, so you have to keep track of that. Simultaneously, you're also establishing your cost basis. And so in the US, we tax transactions, not wealth. So when you go to sell your Bitcoin or your Ethereum or your Litecoin or your Dogecoin at some point, you're creating a capital gain at that point. So that's price strike when you mined it. That's your cost basis. Your gain is whatever your gain is whenever you go to sell it. The other challenge, and this is more for the legal crowd out there, of course, not a humble appraiser, but if you have cryptocurrencies that are in an estate and the private key is lost, whether it was something that was memorized, a so-called brain wallet, or a piece of paper that's gone missing with the private key and your 12 secret words, is there any value there? And I'll put that out to the legal community.
That's very interesting. Thank you for educating us on cryptocurrency and the valuation challenges.
Well, thank you very much.
Thank you for listening to ACTEC Trust and Estate Talk, the podcast about wealth planning matters from the American College of Trust and Estate Counsel. To find an ACTEC lawyer near you, visit actec.org. Please subscribe to this station on iTunes, Stitcher, Google Play, or wherever you download your podcasts. And follow us on Facebook and Twitter at ACTEC Talk.